At assetment, most of our portfolios are comprised of low-cost ETFs. But when we asked our investors, we were quite surprised to know that most of the world knows very little about ETFs. Hence, we decided to create this masterclass so that all of you can know in depth about ETF investing. Hi, I'm Sarthak, Head of Wealth Management at Assetment. Welcome to the first video of the ETF Masterclass. In this masterclass, we will discuss number 1, what are ETFs and how are they different from mutual funds? Number 2, explain the concept of ETF pricing and what are NAV and iNAV. Number 3, explain the nuts and bolts of how ETFs work. Number 4, explain the concept of ETF liquidity and its importance. And lastly, number 5, explain the significance of tracking error. So let's get started. What is an ETF? ETF stands for Exchange Traded Fund and is a pooled investment vehicle that invests in a basket of securities. A pooled investment is one in which multiple investors take part. Each investor adds some money to this pool. This pooled money is then invested across a basket of securities by the manager of this pool, called the fund manager. Investors in the pool get an allocation to units in accordance with their contribution to the pool, and each unit has a net asset value or NAV. Now I know what you're thinking. This sounds just like mutual funds. But unlike mutual funds, ETFs can be sold and bought on the stock exchanges just like regular stocks. Price of an ETF changes throughout the trading session, whereas a mutual fund can be bought or sold at only one price, that is the NAV at the end of the day. Consider Nippon India Nifty 50Bs, which tracks the performance of the Nifty 50 Total Return Index. An investor who buys units of Nifty 50Bs is essentially taking exposure to the Nifty 50 Total Return Index. Similarly, an investor who wants to take exposure to gold can buy units of Nippon India Gold ETF Bs, which is set up to track the INR price of gold. Just like mutual funds, ETFs are also pooled investment vehicles and have an end of the day NAV. NAV reflects the true value of the underlying securities in an ETF. At the same time, the ETF is also traded on the exchange and thus has a real-time price, which is driven by number 1, the price of the underlying securities in the ETF, and number 2, the demand and supply of that particular ETF. So generally speaking, you cannot buy or sell an ETF at its NAV. You can only buy or sell an ETF at its market price. Now, when you go out to the market and buy any product, you want to know how much it costs first. Similarly, when you are purchasing a mutual fund or an ETF, you want to know how much it is worth. Now, since investors can only transact at market price, they need some way to assess that the market price reflects the true value of the underlying securities of the ETF. This brings us to the concept of intraday net asset value or iNAV. iNAVs helps investors to understand whether the current price of the ETF is in line with the price of the underlying security. If the market price of an ETF is significantly above its iNAV, then investors should avoid buying that ETF. Similarly, on the other hand, if the market price of the ETF is significantly below its iNAV, then investors should avoid selling that ETF. Now, I know that some of you might be drawing parallels between mutual funds and ETFs. Yes, they are quite similar, so it can become confusing. So here's a chart for you to make things a bit clearer. Before we close out this video, I would like to briefly touch upon the history of ETFs and the ETF landscape in India. ETFs were introduced in the year 1990 and have since then been used as a very popular option for diversifying portfolios, and they have evolved over time to become easily accessible globally. In India, ETFs are becoming popular, but they are still not as widely used as they are in other countries. This chart shows the growth of ETFs in India over the past few years. You can clearly see that the amount of money invested in ETFs has gone up a lot, as well as the number of ETFs available for investing has also increased. But even though ETFs are growing, there's still a lot of room for ETFs to grow further in India. Now, it's important to note that ETFs are still a relatively new concept in India and people don't know much about them. But things are now starting to change and more people in India are looking to ETFs as an investment option. Despite a few restrictions like lack of awareness and the number of ETFs available for investing, growth is still happening, and the ETF ecosystem in India has matured considerably in the last 5 to 7 years. The stars are getting aligned for an ETF revolution in India, and we keep saying it. ETFs are just getting started. That's it for this video, folks. We'll see you in the next one.